A/ZH/N. Good morning, everyone. Let's begin with a look at the performance of the U.S. stock market overnight. Yesterday, the three major U.S. indices largely closed flat. The Nasdaq Composite settled at 25,913.90 points, the S&P 500 at 7,600.50, and the Dow Jones Industrial Average at 53,178.41. However, pre-market futures signals were notably strong, with Nasdaq futures up 0.73%, Dow futures up 0.97%, and S&P futures gaining 0.11%. Looking at individual stocks, EBIT rose by 0.59%, Nvidia saw a slight dip of 0.08%, Tesla fell by 0.21%, while MicroStrategy bucked the trend with a 0.86% increase. It's particularly noteworthy that the strengthening of S&P 500 and Nasdaq futures coincided with the VIX index dropping to 15.59, suggesting a generally positive sentiment for the U.S. market open today. Now, let's take a glance at the global macro thermometer. The 10-year U.S. Treasury yield has fallen to 4.66%, a single-day decline of 0.49%. This clear signal of continuous retreat indicates that the marginal liquidity easing window remains open. The VIX, often called the Fear Index, has dipped to 15.59, sitting at the lower end of its normal range and approaching the greed threshold below 15, implying low market panic. The US dollar index is currently at 99.97, maintaining its weakness after breaking below the 100 mark, which provides valuation support for emerging market assets. In commodities, WTI crude oil saw a significant single-day drop of 4.36% to $77.74, and Brent crude fell 4.02% to $81.67. This reflects a weakening demand outlook and puts pressure on the energy sector. Gold, on the other hand, edged up 0.1% to $4,121.90, maintaining its high-level consolidation pattern, indicating sustained safe haven demand. In summary, the current global market environment is characterized as risk-on, primarily driven by falling U.S. Treasury yields, a weaker dollar, and a low VIX index. However, this condition could be invalidated if the 10-year U.S. Treasury yield reclaims the 4.7% level, or if the VIX index crosses above 18 in a single day. Moving to the renminbi and the external environment for Chinese assets. The USD to onshore RMB exchange rate is at 6.7392, and offshore at 6.7503, with the RMB maintaining a strong bias. The dollar index falling below 100, combined with declining U.S. Treasury yields, significantly alleviates RMB depreciation pressure, which is favorable for foreign capital inflows into A shares. Regarding Sino-U.S. tariffs, trade, and tech friction, there are currently no verified new events, but we should continue to monitor the implementation dynamics of U.S. semiconductor export controls. Based on these factors, we anticipate a higher open for A shares today. There are three main reasons. First, U.S. stock futures for all three major indices are up pre-market. Second, the RMB exchange rate remains strong. And third, yesterday's Chi-Next index surged by 5.64% on high volume, indicating momentum in the market's bullish sentiment. However, this prediction could be invalidated if northbound capital sees a net outflow exceeding 2 billion renminbi within the first 30 minutes of trading, or if the US dollar index quickly rebounds above 100.3. For today's A-share market forecast, we expect the Shanghai Composite Index to show a strong oscillatory trend, while the Chi-Next Index may experience high-level oscillations. The core logic is the friendly external environment, but the Shanghai 50's 0.29% decline yesterday suggests weakness in large-cap stocks, potentially limiting the upside for the broader Shanghai market. After yesterday's massive 5.64% surge, the Chi-Next Index faces technical profit-taking demand and may see an initial rally followed by a pullback. If the Chi-Next Index falls by more than 1% within the first half hour of trading, the probability of a correction will increase. Regarding key sectors, optical communication and power equipment are most likely to be active today. The rationale for optical communication lies in the continued strength of the US AI computing power industry chain, with NVIDIA showing stable pre-market performance, indicating that the industry trend of expanding AI hardware demand remains intact. Power equipment, on the other hand, benefits from the long-term logic of AI data center power bottlenecks, with overseas power transformer